Hi all! Those who watched my previous videos may have questions. This is understandable because I have been involved in crypto for a long time and terms like cap, DeFi, halving are familiar and understandable to me. But you asked to release a traders dictionary and I did it. Today we'll deal with all the difficult words once and for all to make learning trading easier. Let's go. Let's start with crypto-specific terminology. Look carefully and remember. Blockchain is a distributed database where information about transaction is stored in blocks linked in a chain, hence the name block. Cryptocurrency, a digital or virtual medium of exchange that uses cryptography to secure transactions and control the creation of new units. To put it simply, it's pure code, a set of numbers. Bitcoin is the first and most famous cryptocurrency created in 2009 by Satoshi Nakamoto. Bitcoin introduced the concept of blockchain and became the basis of the development of the entire cryptocurrency market. Altcoin, any cryptocurrency other than Bitcoin. They may offer different features, technologies, or improvements over Bitcoin, such as faster transaction, smart contracts, and etc. Money, the process of adding new transactions to the blockchain by solving complex mathematical problems. Miners are rewarded in the form of new coins and transaction fees, which incentivizes the maintenance of the network. Fork, a change in the blockchain protocol that may result in the creation of a new version of the network. There are hard forks, which create a new branch of the blockchain, and soft forks, which are compatible with the existing network. For example, in 2017, the Bitcoin network forked, resulting in the creation of Bitcoin Cash. Consensus, a mechanism that allows network nodes to come to an agreement on the state of the blockchain, which is necessary for adding new transactions and blocks. Well-known mechanisms include proof of work, used on the Bitcoin network, and proof of stake, used on the Ethereum network. Proof of work, a consensus algorithm that requires participants, miners, to have computing power to solve mathematical problems, which makes attacks on the network economically unprofitable. Proof of stake, an alternative consensus algorithm used for the same purpose, but in this case validators, not miners, are selected based on the amount of cryptocurrency they are willing to stake, lock, which reduces energy consumption. Node, a computer that maintains a copy of the blockchain and participates in transaction validation. Nodes can be full, store the entire blockchain, or light, store only part of the data. Smart contract, self-executing contracts written in the code on the blockchain, automatically executed when certain conditions are met. Sharding, technology of dividing the blockchain into several parts. Shards, which allows you to process more transactions simultaneously, increasing scalability. As an example, the Ethereum 2.0 update, where the number of processed transactions was increased from 15 to 30 per second to several thousand. DAO, Decentralized Autonomous Organization, an organization managed through smart contracts without central leadership. DAO members vote on proposals determining the direction of development. Often, large holders of the project token get voting rights. Example of famous DAOs: Uniswap, MKR. Protocol, a set of rules that define how to individual blockchain nodes interact with each other to ensure the functioning of the network. Okay, we've sorted out the most important technical terms. Now let's move on to terms directly related to exchanges and wallets. By the way, I highly recommend subscribing to my Telegram using the link in the description. There you will find the same dictionary in text form, in which it's even easier to find the right word. Follow the link in the description and look for the desired text in the pinned posts. But let's return to the topic of today's video. Here are the main terms directly related to exchanges and wallets. Exchange, an online platform where users can buy, sell, or exchange cryptocurrencies. Exchanges can be centralized, CEX, or decentralized, DEX. Examples: Binance, Bybit, Coinbase. Wallet, a program or device for storing, sending, and receiving cryptocurrency. Wallets manage cryptographic keys, providing access to funds on the blockchain. Examples: MetaMask, Phantom Wallet, Trust Wallet. Cold storage, a method of storing cryptocurrency offline, providing a high level of security since the keys are not susceptible to attacks over the internet. For example, hardware wallets from Ledger. Hot storage, storing cryptocurrency in online wallets, which is convenient for frequent transactions but less secure due to the risk of cyber attacks. Order, a request to buy or sell cryptocurrency on exchange. Orders can be of different types, affecting how and when they will be executed. Sell order, a request to sell cryptocurrency can be executed at the market price or only at the price set by the user. Limit order. Order book, a list of all active buy and sell orders reflecting the current dynamics of supply and demand on the exchange. Spread, the difference between the highest purchase price bid and the lowest sell price asked for a certain pair of assets, being an indicator of liquidity. Slippage, the difference between the expected and actual price of order execution, especially relevant in conditions of high volatility or low liquidity. Margin trading, trading using leveraged funds, margin provided by an exchange, which allows traders to open positions greater than their own capital, increasing both potential profit and risk. Fiat is a traditional government currency, for example, dollar, euro. On cryptocurrency exchanges, you can often exchange cryptocurrency for fiat and vice versa. Liquidity pool, a repository of assets provided by users to provide liquidity on decentralized exchanges, where users can earn fees for providing liquidity. We need them to quickly purchase or exchange cryptocurrencies, otherwise we will have to first look for someone who will sell them directly to us. Decentralized exchange, DEX, an exchange operation on a blockchain without central control, where users interact through smart contracts, ensuring anonymity and security of transactions. Example: Jupiter, Radeon. Non-custodial, storing your cryptocurrency assets in wallets where only you control the private keys, providing the highest degree of security and independence. This means that even the exchange doesn't have access to your keys, and if you lose them, even the platform support service will not be able to help you. Now, having understood the basic exchange terms, having learned what types of exchanges and wallets there are, having learned what types of orders there are, it's time to move directly to trading terms. Bull market, a market characterized by sustained increases in asset prices, often accompanied by investor optimism and expectations of further growth. Bear market, a period when asset prices decline and investors are pessimistic, expecting prices to fall further. This is where the concepts of bulls and bears actually came from. Swap, the exchange of one cryptocurrency for another, often used to diversify a portfolio or to gain access to assets with a high liquidity. Long, an investment position where a trader buys an asset with the expectation that its price will rise and then sell it for a profit. Short, an instrument with which a trader sells an asset borrowed from a broker with the expectation that its price will decrease in order then buy it back cheaper and return it. Stop loss, a protective order that automatically closes a position when a certain loss level is reached in order to minimize losses. Take profit, an order placed to take profit automatically closes a position when the price reached a specified level. Hedging, a strategy aimed at reducing the risk of losses from adverse price changes, for example by opening opposite positions. As an example, buying on spot and short on futures. Scalping, a short-term trading strategy where a trader seeks to make a small profit from many transactions within a short time. Day trading,
trading an asset during one day, where all positions are closed before the end of the trading session to avoid risks associated with the overnight news or events. Swing trading, a strategy focused on medium-term market movements, where positions can be held for several days or weeks to capture large momentum in the market. Volatility, an indicator that reflects the degree of fluctuation in the price of an asset over a certain period of time. High volatility means rapid and significant price changes. Market sentiment, the general sentiment of investors regarding the direction of the market, which can be optimistic, pessimistic, or neutral. Leverage, also called simply shoulder, it is the use of debt to increase the potential return of investment, but also increases the risk and amount of loss. Next, I'll touch a little on the most popular indicators. Moving average, an indicator that smooths price data, speeding up the determination of trend direction, often used to determine buy or sell signals. RSI, Relative Strength Index, an indicator that measures the speed and change of price movements to determine whether the market is oversold or overbought. MACD, Moving Average Convergence Divergence, an indicator that shows the relationship between two moving averages used to detect changes in the strength, direction, momentum, and duration of a trend. These are the buzzwords that traders use so often in their videos, and now you understand 90% of them, which means my work was not in vain. Like, rate, comment, and subscribe to my Telegram using the link in the description so as not to miss anything, and always be aware of the latest news from the world of crypto. That's all. Thank you for watching until the end. See you in the next episode of Pump Demons News.